Ever looked at a crypto chart and felt déjà vu? The sudden spike, the media frenzy, then, just as quickly, the crash. The crypto market repeats the same boom and bust cycles driven by human emotion. New investors jump in when prices are high, caught up in the excitement. It's simple: hope and fear. Understanding this emotional cycle is the first step to becoming a smarter crypto investor. If you can recognize the cycle, you can avoid the traps. The next time you see the hype building, remember, it's happened before, and it will happen again. Don't let emotions drive your decisions. Every cycle brings new opportunities, but only for those who are prepared. The question is, will you be ready when history repeats? The first major pattern is the hype cycle. It starts quietly. A few people talk about a new coin or tech. Prices inch up, catching the eye of experienced investors. Then the media jumps in. Headlines explode. Is this the next Bitcoin? Suddenly everyone wants in. FOMO, fear of missing out, takes over. People rush to buy, often with little research, just to join the action. Prices skyrocket as new buyers flood in. Remember Dogecoin in 2021? It started as a joke, then exploded when celebrities tweeted about it. Social media hype turned a meme into a mania. Stories of overnight millionaires fuel the frenzy. Everyone thinks they can get rich quick, but for every winner, thousands buy at the top, just as the hype peaks. This is the most dangerous time to invest, when it feels like prices will never stop rising. The hype cycle is powerful because it preys on our emotions. It's easy to get swept up, but hard to know when to step back. The lesson: if everyone is talking about it, you're probably late. Don't let FOMO make your decisions. The hype always fades, and reality sets in. Be cautious when the crowd is euphoric. That's when risk is highest. After the hype comes the pop. The price bubble bursts. A bubble forms when prices soar far above real value, fueled by excitement. Early investors start selling to lock in profits. The price stops climbing, maybe dips a little. Most ignore it, calling it a correction. But more selling follows, and the mood shifts from excitement to doubt. The tipping point comes fast. Hope turns to fear. Remember the ICO boom of 2017 to 2018? Thousands of projects promised the moon, but most had nothing real. When people realized this, prices crashed, billions lost. The pop is sudden. Panic selling accelerates the fall. Those who bought at the top rush to sell, desperate to cut losses. With too many sellers and not enough buyers, prices collapse. Months of gains vanish in days. The party is over, replaced by silence and regret. This is the harsh reality of bubbles. They end quickly and painfully. The warning signs are always there, but easy to ignore in the excitement. The lesson: don't chase the crowd at the top. When the mood shifts, it's often too late to escape unscathed. Bubbles are part of every cycle. Recognize them before they burst. The aftermath is always the same: anger, blame, and disbelief. Only those who stay calm and rational survive the pop. The rest are left picking up the pieces. After the bubble pops, the crash begins. Fear takes over. Logic disappears. Headlines shift from riches to ruin, fueling more panic. Investors who swore to hodl sell everything to stop the pain. Panic selling drives prices even lower. Even experienced investors can get caught in the fear spiral. The entire market mood flips from greed to terror almost overnight. Look at May 2021. Bitcoin lost over 50% in weeks after bad news and regulatory fears. Exchanges were flooded with sell orders. Portfolios were cut in half. The crash is brutal, but it's not the end. What follows is the crypto winter. A long stretch of low prices and low interest. The hype is gone, the tourists leave, and only true believers remain. This quiet period can last for years. Most projects fade away, but the strongest survive and build. Crypto winter is boring, but it's when real opportunities appear. It clears out the weak and sets the stage for the next cycle. The lesson? Don't panic in the crash. Prepare for the recovery. The market always moves in cycles. Patience during the winter pays off in the next spring. Why do these cycles repeat? It's not the technology, it's us. Human psychology drives every boom and bust, greed and fear. This story is as old as markets themselves, from tulip mania to the dot-com bubble. New investors arrive late, driven by FOMO, thinking this time is different. When the crash comes, they panic and sell at a loss, vowing never to return. Experienced investors recognize the signs, take profits during the hype, and buy during the crash. They know no market goes up forever. The cycle is powered by each new wave of hopeful investors. Quick riches are always more exciting than cautious advice. As long as people chase easy money, the cycle will continue. Technology changes, but human nature doesn't. The market is a mirror of our collective emotions. The lesson? Learn from the past, don't repeat it. Be skeptical of hype, And don't let fear drive your decisions. The smartest investors use logic, not emotion. Every cycle brings new faces, but the story stays the same. If you understand the psychology, you can avoid the traps. The market rewards those who learn, not those who forget. Today, in July 2025, we can see the patterns clearly. The last cycle played out just like before: hype, crash, winter, recovery. The technology changed, but the emotions stayed the same. Now, prices are recovering, headlines are turning positive, and whispers of the next big thing are starting. This is the quiet accumulation phase, the calm before the next storm. The cycle is starting again, right on schedule. You can almost map out the stages: slow recovery, growing excitement, media frenzy, euphoric peak, and the inevitable crash. Each time people say, "This time it's different." But the core pattern holds. The question is, do you see the signs? The past doesn't guarantee the future, but it's a powerful guide. Understanding these cycles helps you prepare for what's next. Will you get swept up in the hype, or will you be ready? The next massive run is coming. Will you recognize it? Learn the pattern, and you'll be ready for the ride. History repeats, but you can choose how you respond.